2000. So let's calculate. 1198, and it is very clear that the year ends on 31st 12 98. One more year to go. 1199 to 31st 12 99. One more year to go, which is 2000 31st 12 2000. Here we are going to stop because for this financial year 31st 12 2000 we are calculating and providing the entries for. And the cost of the disposed machinery is 10,000. So always make sure you calculate depreciation for the cost of the non-current asset. 10,000 times 10 over 100. Therefore, for first year, it is 1,000. And for second year, as it is straight line method, it will be the same calculation, which is again 1,000. And for the next year, 10,000 times 10 divided by 100, which gives 1,000. Fine. Now you're clear that the total depreciation, which should be for the disposed machinery, is worth of 3,000. Fine. Now what are we going to do with this 3,000? This 3,000 should be removed from the depreciation account, accumulated provision for depreciation. So let's remove this. Now let's compare which side is greater. And you can observe that the credit side is greater. Let's bring down the credit side balance down, which is 69,000. Bring the same value here and find the difference. So the difference between 69,000 and 3,000 is 66,000, which is at 31st 12 2000 as BAL carried down. And then 2001 as BAL brought down, which gives a value of 66,000. Fine. Now let's finish the double entry for the disposal. Transfer the cost of disposed NCA. And what is the cost of NCA? As per the question, it is 10,000. And what is the selling price of NCA? Let's move into the question. It's 6,000. Let's enter that value. 6,000. And what was the calculated depreciation for disposal? Which is 3,000. Transferring the cost of disposed NCA, which is as at 31st 12 2000. Machinery disposal account debit worth of 10,000, and then machinery account credit worth 10,000. Fine. Now the next step is to transfer the selling price. 31st 12 2000. When you sell, you receive cash or bank, so bank/cash or cash/bank. Cash or bank debit by 6,000, and then machinery disposal account you credit by 6,000. Next is to transfer the depreciation. It also falls at the end of the year. Earlier we debited the machinery accumulated provision for depreciation worth of 3,000, and we will credit the machinery disposal account by 3,000. Fine. Keeping these figures in mind, now we are going to complete the machinery disposal account. As per the format, the cash or bank appears on the credit side, as well as the depreciation calculated for the disposed machinery on the credit side, and if it is a loss, it appears on the credit side. And the cost of the machinery appears on the debit side. And if it is a profit, it appears on the debit side. All of these will be at the end of year. And make sure there should be either a profit or loss. Both cannot happen together. Fine. The machinery cost is worth 6,000. Sorry, it was 10,000. And it was sold for 6,000. And the depreciation calculated was 3,000. Fine. Now you can clearly see that the debit side is greater. Bring that to the balancing. Find the difference between 10,000 minus 6,000 minus 3,000, which gives a loss of 1,000. Fine. Now the last step is to complete the extracts. Fine. So let's see where we are going to put this information. Wherever there is brought down, this value should go to the SFP. And over here, it says a loss. This should go to the income statement. As it is a loss, it comes under expense. And this value goes to income statement. And this brought down value, since there is a brought down balance, it goes to the SFP. Now let's transfer the information. Machinery cost 590,000. Go to the extract. So here is 31st, 30,000. The type of non-current asset is machinery account and the cost is 590,000. Now the next is to see the closing balance of depreciation, which is 66,000, which goes to SFP. So let's transfer this 66,000 over here. Now we have to find the difference between 590,000 and 66,000. Let's see what is the value, which gives an answer of 524,000. That is the net book value of the machinery for that year's end. Okay, now let's complete the extract of income statement. And on expenses, machinery depreciation. And what was the machinery depreciation for this financial year? Is this value, which is 59,000. Let's enter 59,000 over here. And there was a machinery disposal loss. The machinery disposal loss. That was worth of 1,000. Now we have completed the overall disposal of a non-current asset using straight line method. So you can observe, first we prepared the machinery account, then we calculated the depreciation for the existing machinery. Followed by that, we went to the machinery depreciation account, wrote down the opening balance, wrote the calculated amount of depreciation. Then we adjusted for disposal depreciation, that was over here, and then we found it is 3,000. Followed by that, the machinery accumulated provision for depreciation account was balanced. Followed by the steps for disposal were carried out. Followed by that, it was identified that there is a loss in the machinery disposal account. One more entry is left over to write the loss made on disposal. Therefore, machinery disposal account debit and income statement under expenses, it should go as credit, which is worth